All right, welcome to Unit 19. We're going to deal with property management, the leasing and managing, marketing of both residential and commercial property. We're going to cover both of those in this chapter. We're going to talk about you managing your own property or potentially managing other people's property. We're going to describe the various types of property management. This is a field that has grown exponentially into many other fields, and you'll see that. We're going to talk about the management agreement and some of the responsibilities of the property managers, as well as federal laws that cover property management. We're going to talk about the agency that you guys are created, and the safety, which is now a new big item inside of property management. On page 366, right there, the property manager, the property manager has three major goals that they must adhere to. Achieve the objective of the property owner, generate income, and protect or preserve the asset. Which one of these is the single most important of the three? You would think that generating income for owners would be the most important object. That is not the case. The most important activity that a property manager can do is preserve the asset. Preserve the asset. Make sure that it does not go into disrepair. There are times when your investment property will be scheduled to not make income. It's called turnover. Got to paint, got to fix something, it's going to be down. Then we'll put it back in rotation. So generating income all the time is not the single most, because you will literally schedule it not to generate income. But making sure that during that time frame it doesn't fall into disrepair is the ultimate thing a property manager must do. So of those three, the single most one is prevent and or preserve the income or the asset itself. Make sure it doesn't get into disrepair. Now, there are many different types of clients that are used in this. Thank you. There's a list there on page 366. Corporate clients like Lily's, they have corporate property managers for their people that come in. Small investors that have single-family homes you might manage for. HOAs, that's become a big one now. Management companies for homeowners associations. Office buildings, trusts. I've seen all kinds of stuff. Concierge services, vacation properties, housing for seniors, older properties, resort properties, timeshare properties. These are all new businesses that can come from property management. Trailer parks. I know a guy that owns 6,000 trailers. Yeah, out throughout the whole United States. Corporate property. The big one that you guys want to think of is asset management. You guys are all going to go, well, I want to get into bank-owned, selling bank-owned properties and all that. Okay, that's true. You do not call the bank and talk to them about their real estate. Banks hire asset managers. They hire property managers to take care of their property for them. If you want to get in that business, that's who you go see. So if you want to Google asset manager banks, you can get a list. SPS is one of them. You know, you wouldn't call Bank of America, you would call SPS. They are the asset manager for Bank of America that deals with getting the house cleaned up, getting the people out, getting it ready for sale, hiring the manager or hiring the broker, and doing the deals. It's all done by a property management company. Now, the management agreement. To a real estate agent or a realtor, we work under this thing called a listing agreement. A property manager works under a very similar thing called a management agreement. Virtually, they are analogous. The only major difference between the two, and you're going to have to remember some of your prior training, a listing agreement confers special agency to a realtor. What's special agency? They have one thing to do, list the property for sale. However, a property manager confers general agency through the management agreement. And general agency gives him the power to do multiple things for that one property. Enter into lawn cares, hire maintenance guys, go to court, maybe pay bills, do the banking, all kinds of several different things. So that management agreement confers general agency. Now, there are a whole bunch of other things that management agreement does. Obviously, like the listing agreement, describes the property you're talking about, talks about the time frame, talks about what responsibilities you have. That would be the general agency portion. Talks about your authority. Then it also talks about this thing called the reporting. What reporting would you do? Also talks about your compensation that you are going to get. There are some other things up here. Liability, antitrust, equal opportunity. Those all sound familiar? Those were all the same paragraphs in the listing. The only difference is in your authority to do. In the listing agreement, your authority is to market the property for sale or help the buyer buy. In a property manager's authority, it's going to delineate all of the things that you have to do. And some of those things that you may have to do is this thing called a management plan. The management plan dictates how are you going to market these properties for sale? When are you going to evict someone? What court will we be using? Do we have an attorney on staff? And this plan you submit to the potential client. If he likes the plan, then he signs with you to be the property manager. One of the other things are the financial report. And if we go back to that section we talked about in appraising, remember we had gross operating income, and gross means all of the income potentials. Remember, we're not just thinking houses. We've got rent. We've got other parking that we may collect income for, garages, pool passes, rental of the tennis courts, rental of the clubhouse, laundry facilities. We may have Coke machines on site. So there's all those different incomes that potentially can come from this investment piece of property that you are managing. From those, you would subtract out all of the expenses, like lawn care, all of the maintenance, all of the advertising for that property. Another major expense is, don't forget, you guys. The management fee is an expense. That would all come from the gross income, which leaves what? Net operating income. So what you have is gross operating income minus expenses is net operating income. From this equation here, you can generate many different financial reports. You can generate an expense report, you can generate an income report, you can generate a cash flow report, you can generate a budget, you can check last year's budget against this year's budget. So these are all activities as a property manager you might do. Okay? You are also going to probably be in charge of marketing. That's part of your plan. What are we going to do? We're going to have a continually running ad? Do we have a sign? Do we put stuff on Facebook now? How do we market? That's part of your plan. You're going to be in charge of that. Advertising, which is one of the sections of marketing, by the way. What specific advertising are you using? Remember, that would all be an expense that your guy has to write off on. Management, marketing, advertising, costs. That's something that they're going to pay. Something they're going to pay. How do you select tenants? You need a screening process. The bigger you get, the better you have, and I'm telling you now, this screening process better be written down. We have a written policy, and it says this, and they score points. 4 times your gross income, 1 year on the job, 6 months from your last eviction, any felonies, and you get a 5 and a 4 or a 3, and we add them up. Whoever gets the highest score gets the apartment. All right? That ought to be something you guys ought to do so that you don't ever get called down to court and they go, well, you didn't rent to me because I'm a black male. No, because you had a 12, this guy had a 20. All right? I can defend my decision quantitatively, and we've done this for everybody. All right? Collecting rents. This is going to be one of your issues. You may have to collect rents. Different rental markets collect rents differently. I have literally gone and collected rent, picked it up. I've had rents mailed to me. I had one where the client actually took her rent to my bank account in the bank and put it in for me. My rent currently right now out of this is deducted automatically out of my bank account through a draft process. So all of these ways are going to collect rent. But I know that you guys are looking bored, so I figure, well, let's do some math. This will liven the day up. In the property management concept, let's talk about rental, collecting rents, things like that. We have already discussed on how to figure area, right? So if you've got a room that's 30 by 50, how many square feet are in that property? Thank you. The answer is not 15,000, it's 1,500. All right? 30 by 50 is 1,500. If the current rental rate is $8 a square foot, my question to you is, how much is the monthly rent on this? The answer is yes, yes, and yes. Dollars per square foot is an annual basis. I thought we'd covered this once, way back when. So $8 a square foot is the annual rate. So there's 1,500 square feet 1,500 times 12 times 8 is $12,000, but that's per year. I ask you the trick question, and you guys are getting very good at it, is how much is the monthly rent? You would divide that by 12, and you would get $1,000 per month is this client's monthly rent, right? So let's go a different way. Let's say their monthly rent's $2,500. What's their rental rate? If the monthly rent is $2,500 per month, how much is the rental rate? If their monthly rent is $2,500, how do I go backwards? What's the first thing I need to figure? Got to figure the annual rent. So that's 30 grand. 30 grand divided by $1,500, 1,500 square feet. Still using that example. You'd have to use that example. I'm sorry I didn't say that. I thought it was obvious. Still using the same. So the answer is at $2,500 a month rent, his rental rate is $20 per square foot. Everybody get that? Now, here's the cool thing. If you were a math major, there's another way you could have got this way quicker. 2,500 is 2.5 times the 1,000, right? And 1,000 was $8 a square foot. What's 2.5 times 8? 20. Did I break anybody? $12 a square foot is the magic number in the commercial world. Why? Because then it's $1 a square foot per month. $12 a square foot, you divide by 12. So if you got 1,000 square feet, it's $1,000 a month. 25,000 square feet, $25,000 a month. Works out really well with $12. I think there's a couple questions on the exam for this.